I'm telling you not to skip this video because I know support and resistance sounds really easy, but the way I'm going to show you to mark up your support and resistance is very crucial. There's been a lot of times when I've gone through this and people who even know how to trade don't know how to do it in the specific ways. Yes, support and resistance is a very basic concept, but be sure to use this way to mark it up because this is essential to your trading, and I have not seen anyone be consistently successful without knowing how to mark proper support and resistance zones so you know exactly where you are on the chart and you can continue to trade. I haven't made a designated video to this and I get tons of questions, and someone even recommended it in the group, so I'm gonna make a video today on how to make proper support and resistance zones and how to draw them and mark them up on the chart. Highly advise you to watch this video. It's going to be a good one. Nice, short and simple and straight to the point of getting those zones exactly where you want them to be. So that being said, let's get straight into the video. So guys, when it comes to marking support and resistance, the story has to be told from the higher time frame. So that's always where we start. Now, before we start, if you're new to the channel, welcome to the channel. Hope you can find some useful content. Would appreciate it if you could subscribe so we could see you around here more. And please guys, leave a like and also a comment. I really appreciate all your comments and read through them. Down below is some free groups, and I'll tell you why these free groups are important. Not only do I send my daily analysis there, you can ask questions and find me there, and I send daily analysis. But if you see here on my TradeSharp website, we have here exclusive content. Now this is a free webinar. If you go on my YouTube, you will not find this webinar on my YouTube. This was what I did for the group. I did a free webinar where people joined on a Zoom call and I answered their questions, and this is why I'm making this video, because people in the webinar found this very helpful. Now I'm telling you on YouTube so you guys can benefit from this and be able to find this content here, right? So my website link is in the description, and also my groups are there if you want to join to be able to have this content. I try help as much, and if you have any questions, you can find that in there and ask in the group. So I hope that helps. With that being said, all of that out the way, let's get into marking up your zones. So marking up your zones all starts actually from the weekly time frame and even the monthly time frame in some instance. Once a month you have to see where are we on the monthly time frame. If this candle here closed like this is going to be a monthly rejection zone. So this is going to be a key zone, and you'll mark this up as MR for monthly resistance because this is going to be a key monthly resistance zone, right? So that's the first markup. That's your first resistance. Now, if you guys don't know what support and resistance is, a resistance is formed when a bearish candle closes after a bullish candle. I would say for a strong resistance to make a high, you need 2 to 3 bearish candle closes. Just to form a resistance, 1 bearish candle is enough. Now for a support to form, you need a bullish candle to close. A doji like this is not really a good support, but once you have a bullish close, that is a proper support, right? So you need at least 1 candle to form a support, but to form a low, you need 2 or 3 bullish candles to form a low, right? So that's how you're gonna identify which is a resistance and which is a support. Okay, so start from the monthly time frame. Next you're going to go to the weekly, and you need to only check this once a week. Now we can see that the monthly resistance is around here, so we can move it up to the weekly resistance to make it nice and clean here, and we'll call this WR, right? Weekly resistance, right? So the weekly support, right, we take the most recent support. Even though this is a support right here, we can see that the wick rejected this low here. So this is actually going to be our weekly support, right? So now we have our weekly zones. This is on a weekly time frame. We are trading in between these zones. So these become our weekly support and resistance. Now this is important. Even if you're trading on the 5-minute time frame, you need to make sure it's not a good idea to be taking sells at the weekly support, and it's not a good idea to be taking buys at the weekly resistance, right? So what we also identify is in the middle of the range, we have this resistance here, and this is going to end up being another weekly resistance, and we're going to mark that up as WR, right? So next we go on to the daily. Now we start having our zones, and this weekly resistance here is actually also a daily resistance. So we're going to mark this as DR, right, for daily resistance, and we can see our daily support. The most recent daily support is actually going to be here. So this is going to be an important zone here, and we mark that up as daily support. Next, what we do is we're going to go on the 4-hour. Now, you always take the most recent, the one that makes sense. If we break this support here, you have to mark up the next support, which is going to be here. But on the 4-hour time frame, you can see how this starts to become clear, how the daily support is also your 4-hour support. So if we're breaking structure towards the downside, sells might make sense below here with the daily candle closing bearish, because you have this LTA clean candles to fill this zone. So now you're having your key support and resistance zone. And just how we mark this daily resistance here, taking buys up here is not going to be a good idea. Now the next one here is, you can see the most recent resistance is going to be this resistance right here. This is one resistance we have to mark up here, and this one candle has closed already, but it's not enough. You know, it's enough information. You can mark it as also a 4-hour resistance, but it's a minor resistance right here, right? So this is a minor resistance. It's not yet confirmed as a strong resistance yet, right? So we can write this as just a 4-hour resistance, and this is also our 4-hour. Now this becomes our 4-hour support, right? So 4-hour support, because this was the top of our range. Which, why is this a key zone? Because this is being key. We have to mark this as a key 4-hour support, because, let me just change that again. 4-hour support. All right, so this has been key, because if you look here, rejection, rejection, rejection. So even though this candle broke out of it, I still want to mark it up, because this is a key zone. You can see how many times price has broke, and when you get down to the lower time frames, you're looking for zones that have been tested multiple times to mark up. Those are your strong zones that you need to be careful. You should not try to buy in these zones. It's very, very risky, because they're a very strong resistance zone, and that's why you have to mark the higher time frame. Because if you're trading a 5-minute, and you can see everyone who's taking buys at the zone on the 5-minute, it looks good, breakout, everyone's trying to take breakout, but you can see how many times if you tried to take buys in this area on the 5-minute, in trouble. Tried to take buys up here, in trouble, loss. Tried to take buys, loss. Tried to take buys, loss. You can see. So that's why even on the 4-hour, you have to mark up these levels. It's very important to mark up these levels. Now the next part is we go to the 1-hour. Now we're getting close to our trading time frame. So when it comes to the 1-hour, it depends how you're trading on the day. So let's say we were going to trade now. Your trading time frame is going to be the 30-minute and 1-hour. All you want to do is mark the significance. So this is going to be your 30-minute high here. So you put this as your 30-minute resistance, right? In here, doesn't really matter. We have a range we need to range. So we made a small support here, like so. So we can put this as our 30-minute support. But this is now being invalidated because a candle is closing below. So what's going to be more important is this 30-minute high. So this is your 30-minute resistance, like so. And now this is more important, because now you have a potential range to buy, because we have daily closing bullish. Now if you want to know how to find your bias to look for buys or sells, check out my session bias video. I also have a free indicator known as a trade sharp indicator that tells you to look for buys or sells, and you can check that out in the video. I'll link it up in the tags. 4 hours also bullish, so we should be looking for buys, right? So if we're going to pull back, our options are to look for pullbacks to mark the highs. And now when you're on your trading time frame, all you have to do is mark up the most recent support and resistance on your trading time frame, and like that you have a full markup. So it's as simple as that. If you're looking for buys, best buys are going to come probably above this area here once we see some high support, or you can look for support to buy up to there, and now you have trading zones and your support and resistance is marked as simple as like that. If you have a messy zone, something like this, a very messy zone going across here, you can simply just put a box here like this, and you can say trading in this zone is a no. I do not want to be trading in this zone, because it's a very, very, very messy zone here. So you can put a box, and just whenever price comes in this zone, wait for it to leave, or to leave the opposite way before making any decisions. And to be honest, that's basically it, guys. Rewatch this video, understand it. It's very simple. Don't overcomplicate it. This is not a complicated video. Take it very simple. It's just marking the most relevant and recent support and resistance levels to have your levels on the chart. But you have to start from the higher time frame, because just how this was a 4-hour resistance, taking buys at this 4-hour resistance is very stupid until we properly broke out. And now you can see we form a 30-minute resistance, you know, and this is how you can see how on lower time frames we respect this 4-hour resistance. So anyone trying to take buys here, this came from the 4-hour. Anyone trying to buy at this 4-hour, see this bullish candle, oh, bullish candle, we're gonna go up. no, you're at 4-hour resistance. What ends up happening? It rejects it. So be sure, this is why it's important to have your levels, right? And this is a basic video. It gets more advanced where you can start looking at key zones coming from the past, having markups from when price was trading. Because if I know all the zones where price was trading here, in the future when price comes back to that zone, I can still have the markups, right? So you can be very, very accurate with your zones, and the more accuracy you have, the more probabilities you have to executing on good ideas and trade. So with that being said, guys, hope this video helped. Nice short one. Take care, trade sharp, and until next time.